Hi, my name is Monica Carinci. I'm an associate in our tax litigation group, and I'm here today to talk to you about the recent changes to Canada's General Anti-Avoidance Rule, commonly referred to as the GAAR. This is Canada's tool to tackle abusive tax avoidance. It applies generally to a transaction entered into to obtain a tax benefit, which is an avoidance transaction that results in a misuse or abuse of the act or a tax treaty. Recent changes have broadened the scope of this rule, and I'm here today to talk to you about two of those important changes. First, the lowered threshold for an avoidance transaction, and second, the introduction of an economic substance component to the misuse or abuse analysis. On the lowered threshold for an avoidance transaction, previously, an avoidance transaction was one that results in a tax benefit unless it was entered into for primarily a non-tax purpose. Now, a transaction will be an avoidance transaction unless if one of the main purposes was not to obtain the tax benefit. The other recent change is the introduction of economic substance into the misuse or abuse analysis. If a transaction is lacking in economic substance, it will tend to indicate a finding of misuse or abuse. This language of tends to indicate a finding of misuse or abuse is unclear, and we wait for jurisprudence to determine the scope of this new rule. In addition to these changes, a penalty was introduced equal to 25% of the tax benefit, or an extended reassessment period. Contact a member of our tax litigation team today to learn more about these new changes.